We live? I think we are. Brian, can you hear me?
Aha, I was muted. Let me
There we
try
go.
one more time, guys.
Okay.
Hello, everyone, and welcome to our This Week in Crypto report, where we'll be going over all of our on-chain and social metrics that are relevant to what's happening in cryptocurrency right now. I'm Brian, I'm here with Dino, and we will be touching on plenty of things this week. As many of you know, we hit nearly a 3-year high over the past week, got up to about 16.4K before retracting just slightly. And we're still in a very, very high range where many people are calling for more. Many are speculating that we could hit 20K by the end of the year, which is very reasonable at this point. But obviously, anytime people are calling for prices, we like to dig into the analytics and figure out how feasible that actually could be, or whether we're about to fall off a cliff and this is looking a bit too optimistic for what kind of on-chain and social metrics are actually happening under the hood. So we're going to dig into it a little bit, and then as we usually do, we'll answer questions toward the end of the call to go over some altcoins and some various metrics that many of you would like some more clarification on. So as we usually like to start with, we're looking at our All Santiment project screener right now. Since our last week, we have actually added social volume changes, and I'll go over that really quickly because it's quite interesting. You can look at the 24-hour, 7-day, or 30-day changes in social volume. And what this essentially means is the amount of discussion rate that is fluctuating up and down over a set period of time. And as you can faintly see here with this gray font over the green, Bitcoin is up huge in discussion, as you might expect, over the last month. A plus 13.3% change is no joke, especially when you compare it to the rest of these altcoins that are all sort of sitting around neutral. You can see this one, Loopring, and then IOTA. But other than that, we're mostly seeing all the discussion trending up for Bitcoin. While the other altcoins aren't exactly dropping off, we're just having increased discussion from new people from Bitcoin, right? Because if it was being stolen from altcoins, a lot of these would look reddish and they're actually falling down in discussion rates and sort of funneling over to Bitcoin, but that's not what's happening. This is actually good for Bitcoin because it's telling us, or good for crypto, that is, because it's telling us that more discussion is happening overall in crypto, right? Because it's not coming from here. It's just new people discussing Bitcoin. You can also look at the shorter term scale, and not much has changed, right? Negative 0.07% is pretty much a null statistic. So we can also look at price, right? So we're talking about, if it can load for me, there we go. We'll look at the last 7 days. We can see that Bitcoin jumped up a moderate plus 4%. Now, a lot of people, when we get up to these prices that haven't been touched on in 3 years, a lot of people see a jump from something like 14K to 16K as something more major than what it was, right? And I think we actually in the last week went from the low 15Ks to the low 16Ks. And that seems like it's a large percentage, which, you know, plus 4% certainly is. It's nothing to snuff at in the last week, but it's not the same as something like a 7K to 8K jump percentage wise. And we have to remember that when we start talking about these higher 5-digit numbers that we haven't been seeing in quite a while. So this is a good way of getting a little bit of perspective of how much things are actually fluctuating up and down in a set period of time. And as we can see, Bitcoin plus 4.1, Ethereum plus 5.6, and then we actually have quite a few lower cap, sort of 50 to 100 ranked market cap assets that have really exploded. And you can illustrate it better down here. We see one that's just dwarfed them all, CVNT. I won't go into that asset much. It's not one we often touch on, but you can clearly see the propensity for the first half, the top 30 to 40 market cap assets. They didn't really have great performances. But if you look at the mid half, starting with Wi-Fi, obviously fantastic week, as many of you have probably noticed. And then we had just many of these double-digit profits that are hard to see because this bar is dwarfing everyone. But you know, you have OMG, Synthetics, Celsius, UMA, Compound, Waves. Those 6 or 7 did extremely well. We had more, sushi, of course, many DeFi assets, which we'll talk about later on the call. They just had explosive weeks this week, and it was right around the time when a lot of people were sort of writing them off and saying that DeFi was dead for the interim, or at least the rest of 2020. And when people write off assets, that's often when they surge the strongest, as many of us have learned by now. So this gives you a nice recap of what's happening with price. Now we'll go into a little more about Bitcoin, touch on Ethereum slightly, but as I know much of the demand is going to be about for this call, we want to focus primarily on Bitcoin. So I'm going to jump into it here. The first graph I want to show is a long-term perspective. This is the last 10 years of Bitcoin. I've excluded price intentionally because I want us to focus on 3 metrics right now. We're looking at volume, daily active address, and social volume. And we'll start with volume here because it's important to note that when we hit that high in December 2017, actually January 2017, technically, when we got up to about 19.8K on average for most market values for Bitcoin, we had a transaction volume that peaked in mid-December at 22.1 billion USD, and actually in January it got up to about 18.8 at the top. So this was right around the price top, January 10th, even around the 7th or so, give or take 3 or 4 days here. But look at where we are now. Look at where we peaked just a few days ago, or actually this was about a month and a half ago. But consider this a kind of a extended, we're looking at 7 days at a time here. So we're looking at weeks. Just note that in late September, we peaked at about 44.1 billion transaction volume per day. And that's about 2.5 times higher than where the peak was in 2017. And that's a really promising sign, right? It means that there's a lot more tokens transacting between addresses now compared to almost 3 years ago. And that's what you want to look for, right? Activity in the actual tokens. And we can also see
Brian,
that
I think
confirmed.
you're looking at trading volume there instead of if you wanted to look at transaction volume.
Oh, I'm meaning trading volume, but I can actually show the on-chain
Okay.
transaction volume as
Sure,
well.
just wanted to make sure.
Yeah, we flipped the words, but yeah, important to note that. Thank you, Dino. I think it can be confusing at times, but this is just actual trading volume, and I'll show on-chain transaction volume too at the very end of this, just to compare. But yeah, again, we're looking at daily active addresses as well here in orange, and we can see that daily active addresses actually got higher than the average that we're seeing now. So that might be the only thing that's holding us back from surging past those prices that we saw back in 2017, because obviously daily or transaction volume is higher now than then, but DAA was higher then than now. But it's close, right? We peaked at about 1.02 a day back in early August, and we haven't really dropped off much at all. And I'll show a more zoomed in version momentarily. But yeah, DAA a little bit higher then. We're still looking to get a little higher here. For those unfamiliar with the metric, it's essentially measuring the amount of unique tokens or amount of unique addresses, that is, that are actually transacting on a day-to-day basis. And then finally, social volume. So social volume highlighted in blue here. We see just how much that crypto boom in the latter half of 2017 was a factor when it came to FOMO and how much prices really ran up. We got up to a social volume of about 132,000 per day back in late 2017 before swiftly dropping off, right? Right around here is when prices dropped off. And as it fell, we had a slight spike here because in the summer of 2018, it was looking like things were going to rebound. But then, of course, it dropped off. And that's sort of what social volume does, right? When too many people are talking about it compared to the price level, that's when a lot of people get faked out. And what's different about now is we're actually not seeing that same amount of discussion that we saw in 2017. I'm going to zoom in to just the last 3 to 3.5 years or so. And it's a little noisy here, but you can sort of see, let me get rid of volume and DAA to really zoom in on it. you can really see how it's not the same level as it was back then. Even though Bitcoin is rising, there are a lot less people talking about it, and it's catching a lot more people off guard because they weren't, euphoric about Bitcoin quite to the same level that they were back then. And as promised, I'm going to show transaction volume here as well.
Yeah, while you
No.
do, I wanted to comment on this chart, because I think it's
Yeah.
quite interesting. So I saw today for the first time in a while, people were starting to share the CNBC is starting to talk about Bitcoin again, which is, in crypto, one of the tenets of crypto, I think, and Bitcoin, its price action in particular, was always counter trade CNBC. So this is, I think, an important thing to notice is that we are way, way, way below like possibly expected social volumes for such a strong push for Bitcoin in the past couple of weeks and months, which to me I think also points to the fact, and you'll also see this in daily active addresses for Bitcoin, is that the crowd isn't necessarily all the way in. I think. When it gets there and when the FOMO really kicks in, I think we'll see a strong sort of uptrend in social volume. But for now, it's worth knowing that not only is the crowd not really paying too much attention to Bitcoin compared to some, not just all-time high, but if you look at 2019 as well. So it's just like within the crypto market itself, the hype is still kind of not there. But also our social sentiment metrics suggests that Bitcoin related sentiment is relatively high, but not all that much. Like it's not close to what you would. Yeah, so if you even zoom a little bit more, you'll see that we actually dipped in bullish sentiment recently. So it's actually, since Bitcoin's push above 16K, we've actually seen a slight dip towards ambivalent sentiment. So as you can see, we're still above zero, meaning that on average, Bitcoin related sentiment is bullish. However, it's actually been trending downwards. So people seem to be on crypto social media more and more sort of averse to this Bitcoin's push, which is, it can be good for the price of the coin in question. We've seen this time and time again, and if you look back at Bitcoin's previous sort of relationship between the sentiment of the coin and its price action, very often what you don't want to see is you don't want to see these peaks. Bullish peaks where people seem to be FOMOing into the coin. There seems to be a lot of sort of Lambo and Moon talks, very often kind of coinciding with local consolidations and, sometimes eventually price corrections, which we saw in September of 2020 as well. If you even zoom back out to 2019, you'll see pretty much the same story. Very strong spikes in bullish sentiment during Bitcoin's 2019 runs. So the fact that we are, at least at the moment, remaining relatively somber about Bitcoin's price action gives me, at least from a social perspective, some optimism for at least a couple of more days and weeks to come. If we end up pushing above 17K, I think this is going to change quite rapidly. The closer we get to a all-time high, the more this is going to change. But for now, it's remaining surprisingly docile, which I think needs to be mentioned, and I think can be a pretty optimistic sign for the rally.
Yeah, thank you, Dino. I agree with everything that Dino's just said here, and part of the reasoning that I think that there's more of a somber mood here is because traders are smart. I mean, they learn from the past, right? And the last time we saw these price levels, uh, many got faked out, and people were bull trapped. They FOMO'd in around the 15 to 18 or 19K level, and they ended up losing a lot of money because the price fell off a cliff, right? If we go back to, let me get one more year so I can show it. We got to that 19.8K level, and then it really dropped off. Let me actually go to, it can only show 2 years at a time, so we'll go 2017 to 2019. But yeah, why is it not showing up? I'm actually not sure. It might just be the fact that Twitter only goes back to 2018, but I can show it on this. '16, we'll just do the last 4 years. and then we'll go price. Yeah, so right here, let me get rid of social volume. Right here, this is what I'm talking about. This is a lot of people back in 2017 bought in here. This was around the time that, for those of you who were around 3 years ago, everyone started talking about it, right? The joke was the youngsters who were in Bitcoin were all convincing their older relatives to get into Bitcoin at the Thanksgiving and Christmas table. And whether there was actual truth to that or if it was just sort of a meme, who knows? Either way, MVRV does indicate that there were a ton of people that lost money around here. And now, for the first time, right, we're getting back to those prices, even down here. You know, people were all buying in after 10K back in 2017, and it jumped up to 19.8K a lot quicker than what it can do by now already, because it's more of a gradual rise, right? So because of the fact that so many people FOMO'd in here, but then got caught down here without selling their bags, people are profit taking much more often as prices rise now. And that's allowing Bitcoin to actually grow, right? There's more shorting going on. There's more hesitance and cynicism with these prices. Even our own metrics, which I'll jump into briefly, they're showing that it's a bearish time, right? And there should be a correction. And because other people agree with us, and other competitors of ours are showing bearish metrics, people are listening, and people want to know uh, what a healthy correction would look like, and what a profit taking opportunity looks like. And most metrics are showing that right now is that time. And when there's an actual crowd agreement of that, which there is slightly, if we look at the last 2 years, it indicates that people are more hesitant. And because there are fewer people that just wanted to ride the wave up, uh, it's allowing Bitcoin to grow a lot more organically. And that's essentially what I'm seeing. And Dino, you can let me know if you disagree with that. But I think that the lesson learned from 2017 has a lot to do with why people are a lot more dormant when it comes to the price right now.
For sure. And hopefully my mic is doing better now. It seems like
Yeah, you're fine.
somebody. Yeah, okay. So I think you're absolutely right. And I think social volume is going to be sort of showing similar patterns like MVRV. By that, I mean, over time, both of these metrics, I think, are going to start flattening out. And we're not going to see these exorbitant spikes that we saw during 2017 and then 2019 bull run as well, as people become more risk averse and as volatility in the market starts declining, relatively speaking, right? And I mean, most people aren't expecting returns that they expected in 2017, 200, 500% on their initial investment, right? I think as the market matures, both the social volume in terms of the amount of mentions for every specific next peak for Bitcoin and altcoins, as well as the actual expected profit margins, both of those are going to keep declining. So, it's not the market becoming less interested. I think it's just the market becoming more mature and more aware of, the cyclical nature of the market, rather than expecting that every bull cycle high is going to, it could continue endlessly, essentially. So we
Right.
also had a question in chat saying that, or actually a comment in chat saying that the 2019 social sentiment wasn't that high either for Bitcoin. So Brian, if you still have that open, let's just once again show it, because while there were relatively higher highs in social sentiment, if you hover over that, especially, that one, and then in late July, so the actual 2019 top there, so we peaked at about 1.12 deviation from the mean, I think, if you can
Over
hover over
here.
there. No, before we dropped. So during the price high in 2019.
Got it.
Yeah.
Yeah.
So
12.64.
yeah, and then you go a bit up in terms of, yeah, where did we peak? 1.15, yeah, 1.2. So during the peak we were at around 1, I think, deviation from the mean, somewhere around there. We were actually, there was a bullish sentiment even while we were still kind of declining, or while we were already declining. But right now we're about 0.3 deviations from the mean. So in either case, I think we're still ways off from the sort of general amount of bullish sentiment towards Bitcoin that we've seen in 2019. So this was a year ago. So if we assume that most market participants that were active a year ago are still active today, this is sort of the optimal levels that I would assume Bitcoin is going to show more recently. So just something to keep in mind.
Yep, we are in a positive zone, but not nearly in the danger zone levels that we were at the peaks we've seen historically over the last 3 years. So yeah, that's spot on. Yeah, as Dino was talking, I was showing our MVRV chart. For those unfamiliar, this is essentially measuring the average trader returns over the interval of time that the MVRV is titled at. So right here, if you look in the top left of the chart, I'm highlighting basically our most current day here, or our most full last 24 hours or so, that is, and it's showing that the MVRVs for the 1-day, 7-day, 30-day, 90-day, and 365-day traders on average are all in the positives, right? That means for not just hodling returns, right? This is for active trading that's going on for the average trader returns based on our metrics that we're tracking. And that's showing that all 5 of these time intervals are indicating that those average traders made money. Especially if you look at the last year, the average trader's up over 50%. That's a big deal. Obviously, historically, over that period of time, we've seen average traders be over 100%, not just for Bitcoin, but for altcoins especially, this is true. But notable is the fact that over the last 30 days, right, we're still at plus 16.5%. That's a high number. It's not egregiously high, but it's high enough where alarm bells are going off. And if you look at the last, what are we at, the last 6 months here, these 5 metrics were only really universally this high one other time, and that was in July, late July. And that had a temporary top come in, and a lot of people ended up selling right here, right at the last few days of July. And when they sold, they actually got faked out, and we peaked again here at on August 1st, and it kind of kept going around that pattern, and we had a bit of a trading range until MVRV settled down, as a lot of people continuously were fudding out, assuming the top was happening, right? And eventually, it actually did happen. And that's when MVRVs kind of reset. And you can see in the top left here, we actually have some negative numbers for the first time in a while in early September. But ever since that time, like, especially with this yellow one, the 90-day, we saw things just explode, right? And now we are in essentially borderline danger zones for all of the MVRVs. Obviously, 1 day, give or take 3% or so is around what a danger zone is. And I can better illustrate it with our Sandbase Pro model. And this is showing, what all 5 of those, we actually have, I think, 6 different ones here. The 1 day, you can barely see, it's right at neutral, 7, 30, 90, 6 month, and 1 year. They're all in the positive outside of 1 day that's pretty much neutral right now. But this chart is one of my favorites, and this is measuring how close all of those MVRVs are combined to what their respective danger zones are. And if they're below, if you see any of these assets below this dotted red line, like you see for Bitcoin and almost with Ethereum right now, that means that through aggregation, all of those MVRVs that we just looked at over here, these are all at zones that are at or slightly above those historical danger zones. And danger zones are actually quantified by being in the top 10% highest MVRVs historically. And right now, we're seeing that they are, right? Especially the 6 month, right? 6 month trader returns, 143%. That's massive. 49.8 over a year, that's still pretty high. 90-day, especially 25.5% for the average trader is very high. So some event has to happen to end up neutralizing that. Usually it's a price drop, but it doesn't necessarily mean that has to happen. We could also see, what we saw back in late July, early August, where it's a lot of ranging and eventually people are faked out to oblivion and MVRVs start to settle down. So it'll be interesting to see which path that kind of takes. Right now, it looks like we could be at the start of that ranging pattern, right? Because we're at that high 15K, low 16K level. It might be too fresh to really call this a ranging pattern because it's only been a couple of days where we've been above 16K. But we'll see how the next week goes and definitely touch base on how it went to see whether prices dropped or if average traders just ended up starting to take profit, which would be the better scenario for bulls, because that means that people are taking profit without the price having to go down, and that can allow prices to continue going forward. We even saw a mini version of that in late October, right? Because you can see the MVRVs starting to drop here despite prices rise. That means that a lot of people felt that this was the top, and that actually propelled the price to fake a lot of people out, because prices tend to do the behavior that is least expected by the crowd. So interesting stuff there. As far as daily active addresses, always one of my favorite metrics to look at. This is the last 3 years. As we can see, we are in a very, very impressive position when it comes to the gradual rise of DAA. Now, it isn't exactly the rise that you would expect based on this kind of jump from, a low of, it was actually down to what, 3,800 at one point after Black Thursday, and now it's all the way up above 16K again. Obviously, there's been a rise, and this peaked at about 1.2 million, which was at the highest level since early January, give or take. Around the 8th or 9th, I think, was the last time that it was this high of 2018. So almost 3 years have passed since we hit that spike. Now, that being said, I mentioned that it's more of a gradual rise. You don't see nearly this huge drop off, or even if we went back further to October 2017, September 2017, there was a much higher rapid rise in daily active addresses, right? Because that's mentioning, that goes back to what I mentioned about a lot of new people entering crypto for the first time, sitting around the family dinner table, telling people's uncles and aunts, etc. This time, a lot less social volume, therefore DAA is climbing much more gradually. Now, if we look at it on our DAA divergence chart, which our Sandbase Pro users have access to, it's showing that we're still in very bright red territory. Bright red indicates it's in a very bearish territory historically. If we look back, we can see that when green bars were the norm, that's when prices rise. Same here, this was after the big drop off in early September. Prices started to rise because of the fact that daily active addresses were higher than the expectation. But ever since we got to, mid-October, it's been pretty much in bearish territory. And as prices climbed, it's just gotten worse because price is rising faster than active addresses are keeping up. So this is a very bearish sign. It doesn't necessarily mean that prices have to correct immediately, though, because we've been seeing this and talking about it for over a month now in bright red territory. Sometimes address activity can simply catch up to the price, which it has not done yet, clearly, or price will correct and allow these red bars to neutralize back to this level. So it remains to be seen what's going to happen there. But a bullish argument is the fact that, let me find the NBT chart, here it is. So this is another Sandbase Pro model that all of our pro users can access at any time and see the amount of unique tokens that are transacting on the network compared to the market cap at any given time. The lower the bar is, the better. And we use these trend lines because over time, NVT can get larger while still being in a healthy position. So you see the faint green, yellow, orange lines here. if the bar, the NVT, is below these lines, that means it is bullish. If it's above, like we were in, for this long stretch between July 2019 and January 2020, that's when it's red. And you can see that the price behaved quite accordingly when it was red. And as soon as it turned green, that's when the bounce occurred. We were actually in red territory in June, July, and August. And during that time, we still rose anyways, but it was more of a gradual rise. And then as soon as it turned green, right around here, it actually happened in late September, which isn't illustrated because this was a semi-bearish overall month. That's when the price took off, right? And then ever since then, there has been some new addresses and new tokens that have been dormant that have allowed Bitcoin's price to just propel upwards because there's more unique tokens coming from those previously dormant addresses that are now being swapped and exchanged within Bitcoin's network. And we can see it's only improved in November. October was the first bullish month in about 5 months, and November's become even more bullish, and we're in a very healthy territory when it comes to unique tokens being transacted. So this, of course, excludes things like wash trading and bot trading and things that might be sort of insignificant. But I think that NVT is a very accurate metric that can really show how healthy a network is at any given time. And contrary to what we just saw on the DAA chart, the NVT chart looks very good. So if you're wondering why prices can defy what DAA is doing for so long, it's because this is not the only metric that can really foreshadow how markets can fluctuate. There's still quite a bit that can be told when looking at other metrics like NVT.
Yeah, so actually now that we're looking at the DAA divergence and how it's basically just not picking up on it's defining or defying the price action at the moment. I've got a theory about this, and I think it's a theory that a lot of people I've seen have on Twitter, which is given this sort of relatively low growth of daily active addresses and compare that with a relatively high uptick in the actual amount of Bitcoin being transacted on the network in the past couple of weeks. What it's pointing to, at least to me, is that in fact we don't really have the retail crowd into this rally yet, and that this rally might have well been propelled by, not necessarily by large, but I think by a good amount, by large traders, whether that's institutional, traders, or whether it's generally kind of high volume and large addresses. One of the things that we've also seen in the past month is that the average transaction value on Bitcoin has continued to increase, pointing to the fact that the value being transacted on the network largely isn't coming from retail users, but instead it is being driven by large addresses holding substantial amount of Bitcoin, which obviously wouldn't show up in a metric like daily active addresses. So the fact that we are now seeing this sort of divergence, if you would like, between daily active addresses, which are staying relatively low, and the actual transaction volume and the average transaction value, which is growing, pointing to the fact that it's mostly driven by institutional interest or whale interest, however you want to call it. I think, and the fact also that we are seeing very low social volumes while all this is happening. To me, what this points to is the fact that we still haven't seen the retail crowd really pour in. So the point or the title of this video is, what will Bitcoin need to reach all-time high? I think one of the things that it will necessarily eventually need is for daily active addresses to catch up, for clear signs of retail money flowing into the market, in order to provide a sustainable cushion for a push above 19 and eventually 20K. And we actually have a few, I can share it after, Brian, after you share this chart. We also have a few sort of signs that retail crowd is actually still feeling fairly bearish about Bitcoin based on how they've been behaving in the past couple of days, especially the addresses that aren't holding a lot of Bitcoin, which seems to have been dumping since the push above 16K. But I'll show that in a minute, Brian. Go ahead.
Yeah, that's I agree 100% with your theory, Dino. I think that this has a lot to do with the fact that even though there are fewer transactions than we may expect for this price level, those sizes of the transactions are larger, and this confirms what Dino was just talking about. This is the holder distribution chart, which our Sandbase Pro users can see real-time information on, just like I'm showing now. And this is the top four brackets of holders when it comes to the amount that they're holding: 10 to 100, 100 to 1,000, 1,000 to 10,000, and 10,000 to 100,000 coins held respectively by each of these lines here. We can see that the blue line, for example, 10 to 100 Bitcoin, which we're talking about anywhere from 160,000 to $1.6 million held. That's the lowest of these four lines here in terms of the whale groups. So we can see over the last, what is that, about a week or so, give or take 8 days, we went from, I guess it looks like about just under 139,000 holders to give or take an extra 50, what is that, 5,000 holders for blue. So they're increasing a lot, indicating that the average trades are going to be higher because of that group rising. We can see that the orange line here made a huge jump right at the beginning of November. The orange line went from 13,000 all the way 13,700 to 13,900. So that was an extra 170 to 200 holders in the orange group. That's 100 to 1,000 coins held. The yellow line here has mostly been flat, the 1,000 to 10,000 coin holders. But look at the peach line, right? Even peach from last month until now, we can go back a full month and say from the 12th to the 12th, we had 105 holders in that group to now 111. That's 6 more holders that hold between 10,000 and 100,000 coins. I won't do the math in my head now, but that's definitely 8 to 9 figures USD equivalent in Bitcoin held. So that has a lot to do with what Dino was just talking about, and sort of confirms that there are a lot more whales in the space than there were even a month ago, and that's allowing those transactions on average to be higher because there is just more capital being held overall due to more whales in the space. So very interesting there. And I think that the holder distribution metric is a severely underutilized one on Santiment now that even we should be talking about more, because it really gives a good indication of what's happening with Bitcoin and ERC20s at any given point. Last thing I want to show really quick, coin supply on exchanges. So we have seen over time that the higher the amount of coin supply percentage-wise for any asset on exchanges correlates with downturns, while lower amounts correlate with upturns. And if, as you can see here over the last year, we are at the lowest point percentage-wise that we've been in the last calendar year. We're at about 3.84% of Bitcoin supply on exchanges now, after being at a high right before Black Thursday happened. We were at a high of about 6.3%. So not quite double, but close to it back then compared to now. If you were watching this metric about a month to just a week or so before the big crash, you would have been properly notified that there was an imminent sell-off coming. And this is a pretty interesting metric that I think, just like holder distribution, we could talk about more. And it really foreshadows what price is able to do at any given time, right? As like we saw here in mid-June of last year to all the way until mid-October, there was a constant rise that confirmed that a dip was underway. So if you saw this rising, you likely didn't want to be buying the dips, because this just kept on rising as price was going down. Meanwhile, the opposite happened. right after Black Thursday from mid-March all the way until mid-June or so when it finally started to rise again. This was a great time to buy according to the percent of supply on exchanges because of the fact that the supply was being moved offline and into wallets that weren't going to be transacting on the network, and they were basically showing that traders were content and happy to hold during this upswing, right? And it's dipping again now. We'll see if it starts to rise here as we got to the lowest point right around November 2nd, November 1st, when we got to 3.8%. We're close to that at 3.84 right now. So if it goes below that, then the sky's the limit as far as I'm concerned. But obviously, this is not investment advice, and we have to combine this kind of metric with the other metrics we've already been talking about on the call. So that's going to wrap up my segment, and Dino's going to jump into his now, talk about Bitcoin more, as well as some altcoins here.
Thanks, Brian. All right. I also wanted to show. So Jean was asking what the name of the metric was that you were showing a minute ago. So it was holders distribution. So if you just you type in any coin here, you go under on chain, it's going to be the first metric that pops up, holders distribution. So what holder distribution shows is it shows the amount of addresses in a particular holding a particular amount of coins. We also, however, have a holder distribution combined balance. We need to rename this to something more simple. But what it basically shows is it shows the amount of actual Bitcoin, in this case, being held by certain group of holders. Why is this cool, or why is it interesting? Well, I'm going to show you what's been happening with retail guys or retail addresses versus what's been happening with whale addresses in the past couple of days. Actually, I'm going to zoom into the last 3 months here. All right, so this is the amount of Bitcoin being held by addresses holding between 0.1 and 1 Bitcoin in the past 3 months. But obviously, what we want to see is this last couple of weeks. So we can definitely see sort of accumulation pattern by retail guys quite seriously. However, in the past week, there has been growing jitters and growing, I would say, retail anxiety. People starting to, especially in this particular cohort, starting to offload some of their bags. We can see similar trends in these guys were even less, or they started panicking even sooner. So people holding, or addresses holding between 0.01 to 0.1 Bitcoin started dropping here November 2nd, started offloading here, and then once again after we rose above 15k, started dropping once again. So not only is the retail money, I don't think, fully in, I think the retail money that is in is starting to panic a little bit. I will also show 1 to 10 coins. So this is, let's call them mid-size guys. They have also started to showcase a little bit of anxiety after basically a whole month of accumulating their position. This is basically showing the combined amount of all. This is in percentage of total supply, but we can also look at absolute numbers if that's maybe easier for you guys. So we go from 1.74 million to almost 1.73 million here, right? So about 10,000 Bitcoin being offloaded by these addresses, sort of mid-sized players, in the past week. First time once we kind of were approaching 15k, and then the second time once we approached 16k. However, let's now look at the larger addresses, people that are addresses that are holding more than 10 and then more than 100 Bitcoin. So the 10 to 100 Bitcoin crowd has not stopped accumulating. So once again, kind of showing or validating my theory, working theory that is, that this rally seems to be at least so far spearheaded by large investors. When we look at this group of addresses, we are going to see some ebbs and flows here. We are going to see people starting to, first of all, buying here at the beginning of the month. However, then once we got to 15k, some early jitters, but even then, once again, we started rising in the past couple of days. So it is going up and down, but the uptrend is undeniable. And then we can also look at the 1,000 to 10,000 coin range, or basically addresses holding this amount of Bitcoin. Over time, what we have once again seen this bottoming out in early October, basically a month-long accumulation period. Started seeing some jitters here around 15K. Not really anymore. In the past couple of days, I think this is like last 2-3 days, once again, we've seen this group of addresses start to grow their combined balances. All right. So to me, what this is pointing to is the fact that whales are much more comfortable with current price action than retail guys, which are a bit scared. And given combining this with the lack of daily active addresses, with the lack of social interest or social volume, pointing to me to me at least pointing to the fact that the crowd seems to be much less convinced in the current rally, and this is what what I'm seeing on my own Twitter as well, compared to large guys. Large guys seem to be like, yeah, they're a bits of ebbs and turns every now and then, ebbs and flows, but overall we are in an uptrend. Okay, one final metric for Bitcoin that I want to show. This is the latest metric that we've added to the platform. I quite enjoy it. I've gotten feedback from a few different places that they enjoy it as well. So it works better for some coins than others. I'm gonna, just say that from the get-go. Let me try explaining it as well. So what network realized profit or loss does is it tries to calculate the total profit, whether on a daily basis, it tries to calculate the total profit or loss of all coins that are moving on the network. So essentially, if we see these, for example, this spike here, right, of 955 million, that means that overall, of all the Bitcoin that were exchanged on the network at this particular date, November 3rd, the total profit of the network was almost $1 billion, basically meaning that most holders or investors that were moving their coins at this point in time were moving it at significant profit. So this metric assumes that at the point that a coin has last entered an address, this was the point, let's say it was here, this was the point at which it was bought. And then the moment that it moves from that address, starts moving again, this metric assumes that this coin was sold, right? So then we calculate the acquisition price and the difference between the acquisition price and sell price. And by that sort of methodology, we come to a total network-wide realized profit or loss on any given day. So now that we kind of know how this metric works, obviously it's going to work better for some coins than others. I think for digital money like Bitcoin, it works better than for something maybe like Ethereum, which has more use cases than just, we can't really assume that every coin that is being moved on the network is being moved to be sold, right? Obviously. So let me show you last 2 years of data for network realized profit loss, because this is obviously something that we've just released like maybe 2 or 3 weeks ago. So it's work in progress. We're just kind of figuring out how to use this metric ourselves. But one of the things that we've noticed over time is that the periods of kind of consolidation and eventual corrections have a similar pattern. So we see, maybe ideally we see it here and to a lesser extent here. So we see strong profit taking spikes, which start to kind of occur at the beginning of a push, right? As sort of, let's call them weekends, wherever you want to call them, people that were waiting for Bitcoin to rally at least a little bit to start taking their profits, indulge in profit taking. And then this doesn't necessarily tank the price immediately. Actually, what we see, and Max, if you're on a call, you can also, I know that you enjoy looking at this pattern, and you can maybe explain it more from a behavioral standpoint, is that once we see a stoppage in profit taking, or once we see, the crowd in general sort of, network participants stop profit taking at all, is when we kind of end up facing a correction, maybe pointing to sort of increased confidence in the market. We're not going to sell, or maybe pointing to some increasingly bear sentiment as well.
Yes.
However,
Yes.
Yep.
No,
Go
you
ahead,
explained it rightly, because what this metric shows, it's a normal, healthy behavior. Price is growing, you're realizing your profits. It's normal. We all, when we see 2x, 3x, I don't know, 5x, 10x, well, things getting difficult. We take profits. Now, so as long as we see it, growth can continue. Now, when it starts decreasing, it means, or we ask ourselves why people stop taking profits. Because they believe, they strongly believe it will increase much more. And this is where market actually will turn around and will hit you, because market is never doing what you expect it to do. So yeah, and actually it looks, if we wait a few more days and it looks like this, it looks dangerous. No one is perfect anymore. Yeah?
So we're still seeing some profit-taking spikes, a little bit at least.
But it's much less.
Yeah. So I think it works. This is how it works for Bitcoin. For other coins, I've seen much more sort of direct impact of network profit loss on their price action, and I'll show that. I think this is what we're going to close with. And if you guys have, by the way, any questions that you would like us, or any assets that you would like us to cover in today's video, please let us know while I'm opening an insight that I wrote recently, and we'll do some like quick fire analysis using our metrics. Any sort of assets, a lot of stuff is pumping today, guys, not just today, but over the week. If you're interested in where we are in a particular coin's market cycle, on-chain activity-wise, social activity-wise, just put it down in the comments and we'll check it out. All right, so I wrote an insight a couple of days ago. I titled it Finding Top and Bottom Markers in the Latest Altcoin Fiesta. So this was a few days ago, but the image, as Brian showed a minute ago, looks very similar today. So yesterday we saw sort of a segment-wide dump. This is specifically, we're looking at DeFi coins. We saw most DeFi coins dump by between 8 and 15% yesterday. However, if you look at the state of the market today, let me show you. You basically, what you can do is you can go to market, look at our DeFi watch list, and here you see all of the assets that we have labeled as DeFi assets. So if we look at the combined market cap of all DeFi assets in the past 24 hours, we're once again going crazy, right? 36% on the day, with Aave once again jumping, Uniswap, a lot of coins being in double-digit gains over the last day as well. So with this sort of market action, a lot of the things that we are sort of the main sentiment that we've been seeing online is basically, I think, conflated in this one tweet. If Bitcoin continues to consolidate like this without dumping too hard, the market sentiment seems to be that eager money is going to be flowing into alts. So with this sort of narrative, or with this type of logic, what a lot of people seem to be doing or hoping for is they're hoping to buy pretty much every dip they can in altcoins, so that they buy altcoins at a discount, and then try to look for potential exit opportunities to maximize their gains. So the point of this article was to just kind of feature some of the indicators that we've been seeing recently do pretty well in terms of predicting future price activity for DeFi coins in particular, but I think you can also apply it to a number of different assets as well. So here, number one, we're starting with age consumed. So age consumed is a metric that tracks the movement of previously dormant coins. Essentially, when you look at a spike in age consumed, like you see here for REN, what it should tell you is that a substantial amount of previously idle coins that have not moved for an extended amount of time, are starting to move between addresses once again. So what this should tell you is that there is a seismic shift in the behavior of long-term holders. And usually, because veteran traders, long-term holders, if you want to call them hodlers, they rarely make rash investment decisions, and they rarely move their coins without proper and strong market analysis. Therefore, usually when we see these spikes in hodler activity, they tend to coincide with shifts in market conditions and upcoming price volatility. So because of that, age consumed, and I'll show that in a moment, age consumed isn't necessarily a bottom indicator. And it's not it's not a top indicator. It's more of a volatility indicator or marker, pointing to the fact that we could be facing an increased risk of upcoming price volatility. This is what happened with Ren. Bottoming out here, we see a large spike in age consumed, pointing to a strong shift in the behavior of long-term holders, pushing the price upward since. We've seen a very similar pattern in Uniswap. Basically, right at its was it all-time low here, Max? I think it was, right? Right at its all-time low, we saw a big spike in age consumed, pointing to the movement of some previously dormant uni coins, coinciding with an upward trend. So for Wi-Fi, this is what I wanted to show. For Wi-Fi, we can see that age consumed isn't necessarily a bottom or a top indicator, but rather it's a volatility marker. So here at the local bottom, I think this was like a 2-month low for Wi-Fi. We see a string of spikes in age consumed, pointing to a movement of previously dormant coins, moving the price upward or coinciding with an uptrend. And then at this first sort of local price top, we see another string of spikes in age consumed, pointing to once again a change in long-term holder behavior, coinciding with the downtrend. So this is how you should kind of look at age consumed as an indicator. It's basically just letting you know that there is something going on with the behavior of long-term holders, and very often because they have such a gravitational pull on market activity of a particular coin they're holding, it tends to coincide with changes in the price direction. So this is one thing that I wanted to show. Now, moving back to network realized profit or loss, this is what I mean by saying very often for altcoins, I see this metric have more immediate impact on the price action. So for a number of DeFi coins around their local tops, we've seen this massive dips in network realized profit or loss, basically meaning that on average, investors were selling, if we assume that all of the coins that were moving here were moving to be sold, investors were selling their KNC at a significant loss, pointing to basically weak hand capitulation and redistribution to, I mean, you can call them smart hands, strong hands, but redistribution towards bulls. And especially if you have strong bulls, which I think a lot of altcoins and DeFi coins in particular have in these past couple of days, this sort of sell pressure is going to be eaten up, absorbed quite rapidly, and this is what happened very soon afterwards. So we saw this massive dip in KNC's network loss, essentially meaning that people were selling at significant loss, coinciding with a local bottom almost, and then a push upward. Same thing with Bankar, several spikes or dips in network profit loss, coinciding with a push upward. One thing, actually several dips in network realized profit or loss for iFi, here at a local bottom, and then here once we corrected, pointing to an upward trend once again, and then once again here before an upward trend. People selling at a loss, capitulating into strong hands if there are that many, and I think a lot of, especially iFi and these popular altcoins have quite strong both community and speculative interest at the moment, allowing for the price to rise upward. So on the other hand, these would be a few indicators that I would suggest if you are maybe looking at potential bottom indicators. Nothing's going to work 100% of the time, and none of this is financial advice, but this is something that we've seen work in the past couple of weeks. On the opposite side, so if you're looking for potential indicators of an approaching top so that you can kind of move into stable coins for a while until trying to absorb another dip, one of the things that we often see is spikes in exchange inflow coinciding with short-term corrections, basically meaning that as a lot of coins are moving from individual addresses to exchanges, it points to a rising in sell-side pressure, and especially if this happens during these massive sort of price actions or price rallies, it's going to have less bulls being ready or willing to absorb a sell pressure here than they would to absorb like sell pressure here, right? So it's often going to coincide with short-term corrections, like we saw here, like we saw in